Hey, everybody. Welcome to the latest installment of MSP Business School. As always, I'm Brian Doyle, your host with you today. And I would like to welcome our special guest today. Many of you may know him out in the industry. Today, we've got Michael George from Syncro MSP. Michael, welcome. Thank you for joining me today.
Thank you very much. Really delighted to be here.
So, there's a lot of good buzz going on around Syncro these days. I hear a lot going on and I'm seeing a lot of innovation. But before we get into that discussion, maybe tell folks that don't know you a little bit about your background and how you came to be both here in the MSP space and at Syncro.
Yeah, no, I'd be delighted to. I'll give you kind of the log cabin to today's story in as condensed and appropriate way as possible by saying I spent most of my early career in large enterprise technology, small companies, but serving the large enterprise space. So that was a lot of and always institutionally financed companies. They were either venture capital or private equity. So that was my whole technology journey. And in 2011, I had the privilege to team up with Summit Partners and became the founder of Continuum, which was an acquisition of a line of product out of a publicly traded company. I think many folks have some of the history there on that. But it was the first time that the private equity industry ever entered the managed services field, which, as we know today, that has changed, completely. And when we started at Continuum, the acquisition that was made included just 43 employees, all in Pittsburgh, Pennsylvania, no contracts, kind of a month-to-month situation with folks. And in the 8 years that I had the pleasure and the privilege of leading that effort, we ended up with 1,400 employees on 5 continents, and we're a clear category leader, owned by Thoma Bravo at that point, and they merged us in with ConnectWise, and then as they say, the rest is history. That took place in 2019. So that's been my journey. And then I sat out for 5 years. I say sat out. I was doing some other things. I was investing and I was doing some interim work here and there. And the number of people tried to have me come back into the space by taking over any one of the companies that were out there fighting their way, through it. And I was exposed to Syncro, which I found to be a modern architecture, a modern platform that had really a tremendous opportunity in front of it. It really was serving the smaller end of the market, at the time I joined, but we have changed that exponentially, both by growing our existing MSP partners and also attracting newer ones that are in the higher end of the market. And so I've been here for now a little more than a year and a half. So I'm delighted to be back in the channel. I'm fascinated by the amount of changes that have taken place in the 5 years that I was away from it. And I'm helping our MSP partners now capitalize on those changes.
Yeah, one thing about our industry, right? It never stays static for too long. It'll always continue to evolve. But let's kind of talk a little bit about that. You're talking a little bit about, the history of Syncro, and predominantly, it was known as kind of where a lot of the entry point MSPs were coming into play, getting involved with Syncro. But the product's really grown quite a bit, and there's a lot of innovation going on at present. Maybe you could speak to a little bit of the innovation just to give those that are not aware, how Syncro is really expanding the service that they bring to the market.
Yeah, no, I'm glad to see how much the market is noticing that. We have made very significant investments, more than doubling our engineering team, and more than doubling our product team. And I have the privilege of working with some notable people in this industry. One of them is Kristen Costaiola, who was number 2 in engineering at Datto after their acquisition of Autotask and some of the things they had in the PSA and the RMM space. And of course, she knew backup, yes, better than anybody on the planet. and also Dee Zeff. Dee was my partner at Continuum. and ran products for us there. And so these are the two really powerhouse, pillars of people who have a lot of context, understand the market and the space and the dynamics of it extremely well. And they are the ones that are driving the innovation. We've made that maniacal commitment to be focused in a couple of key areas that are very forward looking. And so all the innovation is there. We're obviously serving our existing, customer base too. We have over 5,000 MSPs today that we are tending to.
Yep.
But we're also helping really motivate them and drive them to the future and be willing to give up a little bit of the past to get there. And so, it's been a remarkable experience so far. It's been a lot of fun. It's been a lot of work. But we are really, and we're doubling down in a couple of areas that I'm happy to share more about.
Yeah, work, it's never easy, right? So work is a big component of all this. But, when you talk about some of the innovations, maybe you can go a little bit deeper for those that don't know, where are some of the areas of expansion? Personally, as I shared with you as we were doing kind of our conversation prior to getting together today, I'm seeing a lot of talk about what you're doing with Microsoft. It seems like there's some really interesting areas to explore there.
Sure. So, and it was certainly true even at the time I left the industry at the end of 2019. Microsoft was a platform you just couldn't avoid, paying close attention to, but they were nowhere near where they are today in serving the small to medium business market. And so what I observed in the time I was away was how much they've sort of closed the gap in bringing first of all, they're a 100% enterprise company, number one, and number two is they're 100% channel, right? Yep. So we'll pay attention to those things. The other thing is they are 98% of the operating system in the small to medium business market. So I always think it's funny when people, have challenged me on our strategy to really enhance and extend Microsoft assets for the MSP market. They're like, I don't know if I want to put all my eggs in one basket. Well, if you're in the MSP space, all of your eggs are already in that one basket.
Yeah, we've seen the trend definitely to a lot of MSPs going Microsoft first. Where it's cloud first, Microsoft first, 365 first, and really trying to eliminate the need for server architecture, hardware architecture altogether. Yep. But with that comes a number of different challenges, and it sounds like Syncro is kind of answering the bell on some of them, like how to manage, how to monitor, and how to make sure they're secure.
That's right. And because they're large enterprise, you go up into a 2,000 person law firm. They've got plenty of Microsoft expertise to deal with sort of the complexity of these enterprise tools. But in the MSP space, we don't. And right. So what Syncro is doing is we are simplifying and making and really redacting a lot of the dynamics around the Microsoft tooling, so that it's approachable, consumable, easy to use, easy to adopt. You don't, and so that's number one. And we're really, unleashing the value, really unlocking a lot of the value in licenses, Brian, that people are already paying for anyway, right? Yep. You're already using Microsoft and you're paying Microsoft licenses, but those things have been inaccessible before, and now we're making them accessible and highly usable and leverageable and everything else. So, and we are betting the company on Microsoft, and they, by the way, are betting their company on really two things. One is AI. I mean, go to watch any Ignite conference and
it's all about Copilot.
Times that Satya, talks about agentic solutions and it's replacing business applications and everything else. And I don't think he's wrong. By the way, they've got an $18 billion investment in OpenAI. So, they are betting the company. And that's number one. But number two, and they're the largest security company in the world. Yeah. I mean, pay attention, folks. And I love all these other third-party, SentinelOne and CrowdStrike and Huntress. All these third-party products are talking about, how big they are. But they are a shadow. They're pale in comparison to where Microsoft is on that, on that front. But the big thing for them that they recognized is, if you look at the North American economy, it's a $33 trillion economy that is served by 44.3% is in the small to medium business market.
Yeah.
And Microsoft does not have access to that because they're so difficult to use and everything else. That's why all these third-party tools have emerged, right? Is because they solve that problem. In the pan-European market, which is a $17 trillion economy, 98% of it is small to medium business. And Microsoft has recognized that they, even though they're a channel company, they have not served this. So they partnered up with people like us to, again, refactor their tooling and enhance it and make it, accessible to the MSP to start to leverage those business, the standard and the premium licenses and go unlock all the value in those tools.
So I'll speak on behalf of the MSP now. There's a lot of confusion on where to start with Microsoft, right? There's a lot of new tools that have come in the market over the years. Enforcer, Augment are a couple that are strictly managing the Microsoft world, and that's kind of their game. How does that tip into what you're doing with Syncro? Because there's a lot of confusion for the customer of what tools should I use? What do I really need to get in terms of information that's going to be there? And then, of course, for all MSPs, is this going to be more stack sprawl?
Sure. So, you named a couple of folks that are going after the space. And first of all, I commend them. Having a vision, like somebody said, and Brian, you may recall that it was in 2017 that at Continuum, I stood up and said that cybersecurity was the next biggest both challenge for the MSP and the greatest opportunity. And for almost 2 years, people said, "You're out of your mind." Like, cybersecurity is not a small to medium business problem. Like, who cares about my 12-person law firm or my 4-chair dentist office? And then, of course, the invention of ransomware came out. Now, by that time, we partnered with SentinelOne, we acquired Carver, and we launched a SOC operation in 3 different geographies, way before. And somebody said, "How did you see that?" Like, what, and again, for the ones that are going after the Microsoft space the way we are today, all a little different flavors and approaches. But I commend them because having a vision is having the ability to see something before it becomes obvious to the rest of the market. And these are all companies that see what we see, or at least some portion of what we see, and they are going after the enablement in and around the Microsoft space. So again, my hat's off to them. I think the thing that those tools are all missing that Syncro is uniquely positioned for is that we launched XMM at the end of April of this past year, which combines and couples the Microsoft management tools with an advanced RMM and PSA. RMM and PSA is like air and water in this space.
Yep.
And so to try to just go out and be an independent, Microsoft enabler, which one of the great benefits of it is you get to reduce your tech stack, reduce your costs, reduce your complexity, improve your operational efficiency. But none of those tools do that. It's like buy us, which is adding something, but you don't get to reduce anything. And in the Syncro strategy, we are massively differentiated from all of them, because if you use XMM, you get to start reducing the current RMM that you're on, the current PSA that you're in, and start to really consolidate in and around the Microsoft stack through this enablement. So,
and tightening security at the same time because you've got less APIs open.
Bingo. And to that, I'd like to just add, you're spot on. And so many of these companies were great at innovation until they weren't. And the private equity market is a big factor in that. We can touch on that if you'd like to as well.
Yeah, no, let's talk about it, because it's not often we get somebody that's had the breadth of experience in PE that you've had, Michael, and certainly one of the biggest challenges that MSPs complain about. So let's start maybe from that side. Is great. Now you've been acquired. Does this mean the innovation is going to stop? So maybe you can talk a little bit about the PE dynamic and demystify it a bit for us.
I'd be happy to. I'd be happy to. First of all, as I said, I've built my career in and around that world, and I'm grateful to it. But not all private equity companies and models and all that stuff are the same, and not all industries are in the same cycle. So when we started with Continuum, it was a new and emerging market category. Our financial partner was new to it, and we knew we were in the value creation mode. So it was a growth equity firm that was purposefully and intentionally investing. They weren't worried about profits. But then these markets and these companies reach a tipping point where now they get bought by other private equity companies that are in the value extraction mode. Yep. And what they care about is putting a lot of profit. They need your EBITDA because they put a lot of leverage on you. Leverage is another way of saying debt. And it's part of the private equity model, Brian. So it's not a bad thing in and of itself. What happened is, if you look at the timing of all these transactions, first of all, money in the United States and in a lot of these first world economies was relatively inexpensive. Since our financial meltdown in 2008, interest rates, you could buy a house and have a 3% interest rate. You could buy a brand new car and the car company would give you a 2% financing. I mean, it was phenomenal.
It was.
And then COVID happened, which became the gold rush for the managed services market. And the Federal Reserve moved primary interest rate to zero. The Federal Reserve rate was zero to help stimulate the economy. They were worried it was going to collapse. And that's when ConnectWise acquired Continuum. That's when Kaseya acquired Datto. That's when Enable went public. Kaseya, and this is public information. You can, if you know the right places to look, you can find it. But Kaseya has $4 billion worth of debt on it. ConnectWise, $1.7 billion worth of debt. And so when money's free, that's great. But in April of 22, Brian, just look at the Federal Reserve. Somebody just type it up. Just go, and it skyrocketed 9.5. If you look at the commercial rate of capital for those companies, they're paying 9.5, 10%. So $4 billion. That means Kaseya has to throw off $400 million worth of free cash flow just to service the debt, not pay it down, but to service the debt. Who do you think's paying that? Their customers. I mean, their customers are servicing their debt. Same is true with ConnectWise. So why is there no innovation coming from those companies? They don't have money to do it. Do you think the CEOs don't want to innovate? Of course they do, but they have zero capital. All they're doing is they're squeezing their customers to get enough money to service their debt, and it's a very unfortunate thing.
And then that's an awesome insight and candid take, because I think a lot of folks don't connect the dots between the external markets and how they really impact, because the feeling is, well, we're still doing okay. Managed services seems to weather almost any storm, it seems like, in some degree, right? But the vendors are playing the more traditional game, and it's a lot more difficult to play that game if money is expensive, and we're certainly seeing that to be the case right now.
Indeed.
Awesome. So, we're getting near the end of our time, but, I want to talk maybe a little bit about the MSP relationship now. You and I were speaking before the call today a little bit about, thinking about the long game, even if you're only going to be in it for the short game. Maybe you can talk a little bit about what your thoughts are there.
Sure. You could use sporting analogies. There's a lot of things, but I always encourage people to pay attention to the long game, the longer term. Like, don't be like day trading your tools because you get a little bit better deal here or any of those things. Don't chase this shiny new penny. Play your business out like you're going to be running it for the next 10 years easily, maybe even a legacy business that you transfer, to the next generation of your family. Whether that happens or not is a different issue, but you need to be, you need to be focused on focus, commitment, the long game and don't, again, be day trading tools. The cost of all of that, by the way, is if you look at, and again, if you look at the innovation that's come from, I'm just counting them out because they have really kind of have their grip around the market, but Kaseya, ConnectWise, and Enable signed everybody up in these 3-year contracts and everything else. You can't get out of this stuff. And then, as I said, the innovation that's coming from them is what? They came out with commercial innovation. Oh, K365. It's pricing around and packaging. And then ConnectWise came out with ConnectWise Pro to compete. They're competing with commercial terms, but they haven't integrated their products. They haven't advanced their products. They're old, they're brittle, they're antiquated, and everything else. And the cost to the MSP is in the form of operational efficiency for their technicians. Go look, when at the conclusion of this session, just go look at your P&L and look at what your COGS are, your cost of goods sold. If your tool cost is more than 10%, you got a different problem. Yeah. Your cost is your labor cost. And so when you're when you're working with these old technologies and by the way, if interest rates, there's talk about the interest rates going down 1/4 or 0.5%, you think that's going to make a difference? Absolutely not. Not in 4 bit. These things are so sunk that that's not going to fix itself anytime soon for any of these guys. So instead of like getting another little deal or another I don't know, promo or whatever they're doing, pay attention to the kinds of things I talked about earlier around labor optimization and how to get the most benefit and optimize, how your technicians are using their time and gain efficiencies there, which will far exceeds the benefits of a little, a 10 or 20%, whatever the discount.
Look, if it's just a cost discount, you're wasting your time. If you can't get big bang cost efficiencies through labor or drive new MRR expansion off the tools that you're utilizing, it's probably something you don't need to switch.
That's quite right.
Let the shiny toy syndrome go away.
Indeed.
Awesome. Well, any other closing thoughts before we wrap up today, Michael?
I'm thrilled to be back in the channel. I'm thrilled for all of you listening. I want to be as helpful to you as I can be. Just like you, I started as an entrepreneur and sort of grew my way into a really remainingly fantastic opportunity. There is a next generation. When people, by the way, talk about innovation, they don't mean like a new feature. They mean we need a new platform. We need a next generation platform. Kaseya's, was founded in 2000. ConnectWise 10 years before that. Enable out of the solar. I mean, these are old and brittle, technologies and companies. So what the industry really needs is a next generation technology platform, and with it, a different service delivery modality, a completely different paradigm as to how they deliver managed services. That's what the market is screaming for. And, again, I joined back in here to deliver just that to the MSP space.
Michael, great insights today. Really appreciate you sharing. Listeners, for those that are not watching on video today, we just put up the URL a few minutes ago. If you want to learn more about what's going on with Syncro, learn more about Syncro XMM, go to syncromsp.com. For anybody, for those that are listening for the first time, just know you can consume this podcast either on YouTube or anywhere where you get your podcasts. So thanks for joining us there. Michael, really appreciate you coming on today. This is a fun one for me. I learned a lot. So that's always fun when I get to learn a little something while I'm doing this as well. So thank you for that. And I wish you the best. Good luck with the endeavors.
Brian, and to your audience, thank you. It was a privilege to be here with you today.
You bet. Talk soon. Thank you. Bye now.